Let's welcome in a market voice to make sense of what to do in a scenario like this. Ashwini Agarwal, founder and partner at Demeter Advisors, with us on the show. Ashwini, great having you as always. Thanks for taking the time out. And I wonder if, Ashwini, discretion is the better part of valor right now. Stay on the sidelines maybe, because I was just thinking about it. Both on the upside or on the downside, it's almost becoming very, very difficult to measure the risk reward, let alone the gumption to enact a trade.
Morning, Neeraj. I think you're right. So what's happening is that there are a lot of events which are shaping up the market. So on the downside, I mean, you have a very weak earnings season playing through. You have all the noise on the tariffs that is roiling the market sentiment, and lastly, you have a huge amount of paper supply via the IPO and offers for sale that are going on a day-to-day basis. So, there's really all the three factors hitting the market. And on the upside, I mean, one hopes that, what RBI has done by way of improving the liquidity, and there is surplus liquidity of 4 lakh crores in the banking system, what they've done on interest rates, and apparently another 25 basis points might be on the annual. That might help demand with a lag as the year progresses, but that's just a hope. I mean, as of now, there are no signs that consumer demand is anything to write home about. So yes, it's a very, very challenging situation, both on the downside and on the upside. My sense is that, the correction that we have seen in the last 3 to 4 weeks probably limits downside to not more than 5% from here. But I'm just kind of sticking my neck out, and it could be a lot more. Who knows? Depends a lot on how the US does from here.
So Ashwini, okay, that's an interesting one. So are you saying that if the US, you're saying the US as a nation, what it does to tariffs, yes, or what do US markets do per se?
How do the US economic data points read out, and how does the US market react to that? Because we are starting to see some weakness in the US economy. The markets have been very, very strong till now, but will this continue or not is the real question.
Ashwini, hi, Tamanna here.
Morning, Tamanna.
Do you think that there is a bit of a thick skin that Indian markets now have to all of the Trumpness coming out every morning? Sorry, I'm trying to find more words to describe what we're seeing. Or do you think that we're underplaying the impact of what he's saying? When we had a commentary this morning from one of our experts saying that his bark is worse than his bite. I mean, can we really safely say that?
I have no idea. I mean, I wouldn't want to hazard a guess as to what happens on the policy front, whether in the US or here. But what I would say is that, exports to the US at the end of the day are 2% of the GDP. Even if you take a big haircut there, I mean, does it really sink India or Indian GDP? The answer is probably not. Yes, from a headline perspective and from an export earnings perspective, it could be a little bit of a challenging period. But, we'll have to weather the storm. I mean, it's up to the Indian policymakers to decide, and for the US to decide what each country will do. We as market participants will have to just kind of muddle through. That's how I see it. At this point. So, the policy front, I'm not so bothered about, to be honest with you. I think the real question which I'm struggling with is that why is demand in India so weak? I mean, we've had now, 6 months of concerted push from the government on government capex. We've had better liquidity. You've had better rates. If you read through the commentaries from the banks and from the lenders, they seem to be positive about asset quality, especially in the microfinance space. In a quarter or two, they expect things to turn around quite smartly, but the market doesn't seem to buy that narrative. And all indications of demand are very soft. And to me, that is a real worry.
What would you do right now then? I mean, there's one take for caution, and this is something that Neeraj spoke about earlier as well. But this is also a time for opportunity, you think, because domestic, fundamentally sound companies, are they enough out there?
Yeah, I mean, if you sift through the market carefully, you can find bottom-up earnings stories which are India only in nature, have very little to do with international trade, and are in sectors where demand is reasonably okay. So, I don't own Godfrey Phillips, and I'm not recommending that stock. But just going back to the comment, your analyst was making. I mean, it's a business that's winning market share, and therefore its earnings are beating that of the market leader. I mean, these kind of narratives are there. So you have to sift through the market on a bottom-up basis, find companies that are either winning market share or are in an interesting space which is continuing to grow despite all the headwinds we are seeing. The consumer, in my view, is not consuming, the traditional things, the products or cars or automobiles, but they are spending more on services, they're spending more on entertainment, travel, etc. If there's a way to play that, I mean, those are the areas that you have to seek. And the Tamanna, I cut my teeth in the market through the early 90s through till 2003. The market went nowhere. Okay, but you had plenty of bottom up stories that made you money. And I think we are back in that kind of a situation where headline markets may not do much, but there'll be individual stories that will do well.
Uh, are there enough individual stories this time round in the consumption space? Is that where you see some of these opportunities? Would you look at maybe a rebound in IT? Do you think IT has been beaten down more than it deserves?
IT, I'm not very sure about, because I think the hiring patterns are still very mixed. I mean, if you just see the commentary from Infosys and TCS, I own neither. Just to be very clear, this is a general discussion. They're diametrically opposite. I mean, one seems positive about hiring, and the other seems quite negative. So I don't know where IT services are going. So there again, you might find one or two bottom-up ideas, but I think as a sector, I'm still not very clear where it's going. In the consumption space, yes, there are stocks that are looking good. I think in the construction infrastructure area, I think there are select stories which are good. In healthcare, there are stories both in pharmaceuticals as well as in broader healthcare services. There are stories which look good. And mind you, I've moderated my return expectations significantly. I mean, if I think that one can get mid-teen returns in a stock from on a bottom-up basis, I think that's a fairly attractive outcome. That same number, say 2 years ago, would have been north of 20%. So, you have to be kind of cognizant that the markets are expensive and taper your returns. But if you do that, yeah, there are bottom-up stories. I mean, at the end of the day, every individual investor needs not more than 20, 25 names. And I think, can we find that many names? The answer is yes.
Where would the top decile of themes be where you're finding these opportunities, Ashwini? I know you've liked some real estate in the past, you liked select bit of energy transition in the past, you liked select bit of pharma in the past. What's the calling now?
If you ask me, it's the resetting of the marketplace. In many areas, whether it's in energy, whether it's in go-to market, like think about it. Okay, traditional retail versus quick commerce. You have similar sort of narratives playing out in many industries. You have shift in market shares taking place. I mean, again, just to go back to the Godfrey Phillips versus ITC example. So I think in a broad market where the broader economy is not doing much and aggregate demand is probably not doing much, you have to look for areas where somebody is eating somebody else's lunch. Okay, and that's where you have to go. I think that would be, in a broad sense, what I would guide to. I mean, I can't unfortunately speak about individual names, but that's what I'm looking for. I'm looking for companies which are uniquely positioned because of their circumstances, because of the bets they've made in the past, which are coming down to fruition, whatever it is, and who are in a position to grow, notwithstanding the challenges.
So since I mean, not to take that pun so far, but do you think platform companies make the cut to companies that are eating someone's lunch? Definitely well positioned in areas where others are not there. The moats seem pretty decent. I'm not asking you to name names, but do you think that there is some scope there even now?
Yeah, in some names, yes. In some names, there is a scope now. And similarly, delivery, not the stock, delivery companies. I'm talking about logistics companies. I think you're seeing market consolidation there. If that trend kind of continues, you might see pricing power come back in that industry. And which players to bet on is for every individual to decide. You can look at consolidation as a theme. You can look at market share shifts as a theme. You can look at changing consumer behavior as a theme. You can look at healthcare. You can look at pharmaceuticals, which continue to do very well despite all the challenges. And mercifully, till now, at least they haven't been hit by tariffs. And that might come, who knows? But for the moment, not. So those are all the things I'm looking at.